Entrepreneurship for Small Business Majority. We're a national small business education and advocacy organization founded in 2005. We believe that small businesses are central to a thriving and inclusive economy, and we advocate on their behalf and provide education and resources to them. Over the years, we've reached more than 80,000 businesses from our 8 offices across the country. We focus on policy issues of chief concern, access to capital, entrepreneurship, healthcare, benefits, taxes, things that affect you the most. Lately, for the past year, we've been focused primarily from an advocacy perspective on ensuring that federal and state relief programs best serve your needs and get to you as effectively and efficiently as possible. And we also host webinars like these in partnership with groups like SCORE and others, both locally and nationally. Since the pandemic began, we've hosted more than 400 events across the country, reaching thousands of businesses with this information. My area of focus has been on understanding all the nuances of the PPP and EIDL programs that we're going to be discussing today, and want to share that with you. I'm going to start with the breaking news. A couple of weeks ago, the White House announced some changes to PPP eligibility for folks, as well as a dedicated window for the smallest businesses to apply for PPP. That dedicated window is ongoing right now for businesses with 20 or fewer employees, and runs through March 9th. So if you have more than 20 employees, the bank's not able to process your application right now. After March 9th, they'll be able to do so. But this rule change was meant to help the smallest businesses that were somewhat excluded from the first round of PPP be able to access the available funds left for the program. The biggest, I think, change is in the calculation formulas for sole proprietors, independent contractors, and self-employed. And it's the rule also set aside $1 billion, particularly for these businesses in low and moderate income areas. I'm going to talk in a second about the specific changes for that calculation. The rules were released yesterday by the SBA, which I'll be covering in depth here. We're still kind of digesting the rules, and we'll be providing more information about that in future webinars and on our website, which I'll share those resources with you as well. The changes announced by the administration the other week also expanded PPP eligibility to businesses that had non-felony convictions, or non-fraud felony convictions, I'm sorry, as well as small businesses that may have defaulted on federal student loans, and also expanded eligibility to lawful U.S. residents who may not be citizens. But the big one is the changes around the self-employed. And as I mentioned, those rules were released Wednesday, as well as a new application. I will say at the top that the banks that are handling PPP applications might need some time to learn more about these new rules and adapt their online processes for accepting applications for this. But just to provide that context, the rules and the application were released Wednesday by the SBA. Information is on their website. But briefly, self-employed with no employees will be eligible for a loan equal to now your 2019 or your 2020 gross income, as opposed to your net profits. Previously, it was your eligibility for PPP was based on line 31 of your Schedule C, which is your net profit, which is the money left over after all of your deductions. But now you can calculate it based on your gross income for that year before you take your deductions. The core rules of PPP still apply. I'll cover as a refresher for those who may not be familiar with the overall program here in a minute. But essentially, you'll take your gross income from whichever year you use, 2019, 2020, divide it by 12, multiply it by 2.5. That will be the total amount of PPP that you would be eligible for. Again, you can use either your 2019 or your 2020 Schedule C. If you haven't done your Schedule C for 2020 yet, you'll want to do that if you think you earn more money this year compared to 2019. And yeah, so there's also, this applies to other PPP loans as well. If you received an EIDL before April 3rd of 2020, you can refinance that EIDL loan into your PPP so long as you use that EIDL for payroll. Again, this is only for EIDL loans that were made before April 3rd, 2020. For those folks, self-employed individuals who may have already received a loan, this rule change does not apply. This is only going to apply to loans made as of the issuance of the final rule, which was on Wednesday. So if you had a loan already made, unfortunately, at the moment, you're out of luck, although it's something that we are aware of and others are aware of. And there might be some movement to reverse that or to make it so folks who receive, self-employed individuals who receive maybe a smaller loan amount get additional relief. But at this point, it's only for new loans made. Again, you can choose either your gross income or your net profit. I would imagine you would want to choose your gross income. If your gross income exceeds $150,000, the existing safe harbor rules for PPP loans don't apply. So essentially, when you apply for a PPP loan, you have to attest that you needed this loan to, due to the uncertainty of the economic conditions brought by the pandemic, that this loan was necessary for your business. And the SBA, as part of a safe harbor ruling, said for all PPP loans, any loan under $2 million, it's just kind of assumed that that's the case. But if you do show gross income of more than $150,000, just know that safe harbor won't apply, and the SBA could take a look. Not necessarily saying they're going to, but they might take a closer look at your application. And again, the total compensation the total loan amount would not exceed $20,833. This is going back to the initial rules for the PPP, was a max $100,000 annual salary for any employee, including owners. So the maximum amount of PPP you would be eligible under these new rules remains at this amount, $20,833. If you're a self-employed individual with employees, you can also use payroll expenses to calculate your employees' payroll, although I think those are pretty unique case. Again, I'll go into more specifics of the PPP, overall what it is for folks who might be unaware in a moment, but I also wanted to provide some other updates on what we see coming in the next stimulus bill. This is the bill that was passed by the House, still being debated in the Senate currently. As far as the latest iteration we saw is concerned, there's another $7.25 billion allocated for PPP. It would also expand eligibility for certain nonprofits and internet-only news companies with more than one location to get PPP. And it would provide another $15 billion for the EIDL Advance or grant program. It would also provide a new $25 billion fund for grant programs to aid restaurants and other food and drinking establishments it would be a grant program based on the shuttered venue operator grant program that was part of the bill passed in December. Just to provide an update on that, we still haven't seen any updates from SBA as to how that program is going to be rolled out for folks who are curious, but I imagine that how they're going to administer those grants, either the shuttered venue or this new restaurant bill, if it passes. Grants would be available under this restaurant program up to $10 million. Grants would be calculated by subtracting your 2020 revenue from your 2019 revenue. And there would be a dedicated enrollment application window when the bills pass, focused on women, veterans, or other socially or economically disadvantaged groups. And the grants could be used for a wide range of expenses, not just payroll, as is the case with PPP. The stimulus bill would also provide funding for what they're calling a community Navigator pilot program to help organizations help folks in disadvantaged communities access these federal relief programs. And it would also provide an additional amount of money, $1.25 billion, to the shuttered venue operator grant program. We'll talk a little bit more in depth about that program in a moment. Next, I'm going to talk about what's new in PPP Round 2. This is based on the bill that was passed in December. Top of line is for loans made under $150,000 December. There's simplified forgiveness now. When it comes time to have the loan forgiven, it will just be a one-page application form. The bill passed in December also made available second draw loans for PPP for those folks who were able to demonstrate a 30% reduction in revenue from 2020 compared to 2019. There are also some additional costs that can be included in your non-payroll costs for PPP, which we'll go over. But the 60-40 split in which you have to spend 60% of your PPP proceeds on payroll remain in place. And we'll get into some specifics here. Just quickly comparing the two programs, overview of the programs. I know I kind of started with the assumption that everyone knew what those programs were and the latest changes to them. But just to level set here for a moment, there's two main federal relief programs for small businesses impacted by the virus. The first is the Paycheck Protection Program, which I've been discussing primarily. There's also the Economic Injury Disaster Loan Program, which is offered directly through the SBA. The PPP program, you have to find and go through a bank to access these loans. They're SBA approved lenders. And there's ways in which, if you don't have a banking relationship, to find one I'll cover here in a minute. Briefly, the PPP program was created in response to the coronavirus pandemic. The loans are fully forgivable. You have to use the proceeds on certain things, primarily payroll costs, but also other things like mortgage interest, rent, and utility expenses. The latest bill passed in December expanded those non-payroll costs a little bit, which we'll talk about here in a moment. For any loan that's not forgiven, any portion of the loan that's not forgiven converts to a 1% fixed interest rate. There should be no credit check or collateral required by the bank to receive this loan. And the maximum repayment for any portion that does convert to a loan is up to 5 years. For Economic Injury Disaster Loan, this is a program that offered directly through the SBA that existed pre-coronavirus. These are non-forgivable loans, so you will have to pay them back regardless. They're a bit more flexible in what you can spend the proceeds on. The interest rate is fixed at 3.75%, repayable over 30 years. There could be some credit checks, collateral, and other kinds of checks required by the SBA as part of this application process. And this is also the program through which the EIDL advances were administered, and some are being administered as part of the latest stimulus bill passed in December. The PPP was reauthorized in December for another $285 billion. If you didn't get PPP in 2020, you're still eligible to apply now. I will note that the program closes on March 31st of this year. It's also something we're starting to take a look at, maybe advocating on behalf of that being extended. But if you haven't applied for PPP, and if you're eligible now as a self-employed individual, you want to try and get going as soon as possible. The application portal was staggered. There were some initial rounds where smaller businesses could apply first, and that's also the case, as I mentioned at the top of the webinar. What's happening right now, only businesses with 20 or fewer employees can apply right now. Again, the 60% payroll rule still applies, and you still must have been in business as of February 15th, 2020. The loan is calculated, the eligibility amount is calculated based on your payroll costs, looking at the previous 12 months or for the 2019 calendar year. You can kind of choose, and your bank will choose for you. And again, for self-employed individuals, and now as of yesterday, you can look at your gross income for either your Schedule C on your 2019 or 2020. That's line 7 of your Schedule C. Seasonal businesses can take a different approach to looking at their average payroll costs, because obviously their payroll costs are greater in certain months. Businesses that were not in business between 2019 and February of 2019 and June of 2019 can use average monthly payroll costs for the first couple months of January of 2020. I mentioned second draw eligibility. So if you did receive a first round PPP loan, the bill passed in December allowed for second draw PPP loans. A few key changes with the second draw loans is the max amount is now $2 million. Previously, it was $10 million. And you have to have fewer than 300 employees. Previously, it was 500. You must have used your first PPP loan. There have been some cases where we've heard of folks trying to get an application for their second draw loan through their bank and through the SBA, but it being held up because they had a pending forgiveness application for their first loan. That's something we're continuing to monitor, but just to flag that's delayed some second draw applications, at least over the past few weeks. And again, you have to have demonstrated a 25% reduction in revenue for a quarter compared to a 2019 quarter. Some places are looking at the entire 2020 compared to 2019. And the application opened in January. And again, it closes at the end of this month. So if you do believe that you're eligible for a second draw PPP, maybe you're a self-employed individual who received a first loan based on your net profit in the first round. It's still unclear to me how, as a self-employed entrepreneur, you can prove the 25% reduction in revenue to qualify for the second draw. But I would definitely, if you think you might be eligible and you can maybe prove it on your book of business or your revenue statements, I would definitely get in touch with your bank, especially with these revised rules, and see if you might be able to qualify for a second draw. Although, like I said, the SBA hasn't really clarified anything in regards to that. The same limitations for second draw apply. You'll get 2.5 times your average monthly payroll costs, like with the first round of PPP. Although for certain restaurant businesses and hospitality businesses, that amount was actually increased to 3.5 monthly expenses. Again, just to clarify on the PPP loan terms for any portion that's not forgiven, all loans have a fixed rate of 1%. The interest rate is non-compounding and non-adjustable for both first and second draw loans. Under PPP, your lender cannot charge you a yearly fee, can't charge a guaranteed fee, can't charge any kind of prepayment penalty or request any kind of collateral or personal guarantees. So we've seen some instances of some not necessarily banks, but online companies or others promising to help people get PPP in exchange for some of these fees. I would just be very careful of potential fraud as you're seeking this out. If your PPP loan is not forgiven, it has a maturity of 5 years. The repayment will be deferred until your loan forgiveness amount is determined, until you know how much of your loan will be forgiven. You don't need to pay anything. And then borrowers if you fail to apply for loan forgiveness, you'll have to start repaying within 10 months of the end of your covered period. I talked about the eligible costs for payroll versus non-payroll costs for PPP. When you're calculating your eligibility, if you're not self-employed, you look at things like total compensation for all employees, payment for vacation, parental, family, medical leave, allowances for dismissal or separation that you may have paid, payment for group health benefits, including premiums, retirement benefits, and or state or local taxes assessed on compensation. That's how you determine eligibility for payroll costs when you're going out and determining your eligibility for how much PPP you can get. And then the allowable use of the PPP proceeds are on all of these payroll costs noted over here. Those are the payroll costs. The non-payroll costs are interest, mortgage, rent, utilities, and a few things that were expanded as part of the latest stimulus bill. And that includes covered operation expenditures, payment for any software, cloud computing, other human resource or accounting need you might have had. That's now an eligible non-payroll expense for PPP. Covered property damage costs. If any of your property, commercial property, was damaged during the disturbances that occurred throughout 2020, those are now eligible PPP costs. Covered supplier costs. If you had a contract with a vendor that you need to run your business, those are now covered non-payroll costs. And any worker protection expenditures, PPE, setting up plexiglass, retrofitting your space, those kind of expenses are now considered eligible non-payroll PPP costs. But again, you still have to spend 60% of your total PPP proceeds on payroll costs. Otherwise, a portion of your loan may not be forgiven. To be eligible for forgiveness, you must commit to maintaining an average monthly number of full-time equivalent employees equal to or above the average of the number of FTE employees you had during the previous one-year period. The amount that can be forgiven will be reduced if there's any reduction in FTE equivalent or if any of their wages are reduced more than 25%. There are some safe harbor provisions. If an employee left, you tried to rehire them, but they refused, as long as you can provide documentation that you attempted to rehire that employee, that would be excluded. But as far as forgiveness is concerned, the latest bill for loans under $150,000 and left, it's basically just a one-page certification now that you expended all the money as laid out in the rules. And you still have to describe the number of employees that you retained and the estimated amount that you spent on payroll, I believe. I would definitely advise that you maintain all payroll records for the next few years in case you are subjected to an audit by the SBA. But like I said, there are safe harbor provisions for loans under $2 million. There have been some concern about taxes and deductibility of PPP loans. Expenses made with forgiven PPP loan proceeds can be deducted from your taxes, at least federally. It kind of varies state by state. Some states conform with federal tax law. Some states don't conform with federal tax law. We've been advocating to ensure states follow federal tax law in regard to PPP, but that's not the case everywhere. So definitely check with your state. So any kind of PPP forgiven funds, emergency idle grants, advances, this should not be taxable as income, and deductions are allowed for otherwise deductible expenses of payroll costs. So if you previously deducted certain payroll costs, you still should be able to, at least at the federal level. And again, your gross income will not include any PPP loan amount that's forgiven. These go over the kind of the safe harbor FTE reductions I was talking about a minute ago. these won't affect forgiveness if you made a good faith written offer to rehire an employee and they refused, if you fired an employee for cause, or an employee voluntarily resigned, or if an employee voluntarily requested a reduction in hours. If any of those things happened, just document it, and it won't affect it should not affect your forgiveness amount or eligibility. And if you did reduce headcount during the height of the pandemic, the shutdowns at the very beginning, but you restored them all by the end of this year, you should be exempt from any FTE reduction as well. Some other changes in the bill that was passed in December is that the EIDL advance will not be reduced from the forgivable PPP amount. This is a change. We saw some businesses where they may have spent their PPP exactly how it's supposed to be spent, but they also received an EIDL advance of $10,000 and had to repay that $10,000. The law says that this should be retroactive. Still haven't seen any guidance as to how that's going to be remedied for folks who've already had to repay that amount or been ordered to repay that amount by their bank. But just something to keep in mind that that's no longer the case, should not any longer be the case. The law also clarified what's the covered period for a PPP loan. Can be any amount of time that makes sense for your business and payroll expenses between 8 and 24 weeks. Previously, it was either 8 weeks. At the very beginning, it was only 8 weeks, and then it was extended to 24 weeks. And now they're saying, okay, any kind of time makes sense between those two dates. The law also clarified that certain other types of insurance expenses like vision and dental are now eligible PPP expenses. If you still are in the market for a PPP loan and you do not know who to go to, SBA has a tool called Lender Match. It's a free tool that you can use to fill out and get matched with local banks in your area. Also, I'll cover our website as well, benchrise.org. We have a list of some nonprofit lenders that we work with kind of on the national level and in various states that are offering PPP in this latest round as well. I'll touch briefly on the Economic Injury Disaster Loan Program. These are loans available up to $2 million. You apply directly through the SBA, as I've mentioned. 3.75% interest rate. It's 2.75% for nonprofits. Nonprofits are eligible. Self-employed are eligible. I should also mention most nonprofits are eligible for PPP as well. And the SBA extended the deadline to apply for EIDL through December 31st of this year. So if you haven't applied for an EIDL yet, you are still eligible. The latest bill in December also extended the EIDL advance program. Basically, if you received an EIDL advance and you live in what the SBA and the government determined to be a low moderate income area, you can be made whole if you receive less than $10,000, or if you apply but were too late to access any of that EIDL advance grant money, you'll be made whole up to $10,000. But the SBA says it's going to proactively reach out to borrowers who fall into these two categories. We still haven't seen any movement on this front, but it was in the bill and it should happen. But if you didn't get an EIDL advance, or if you think you're eligible for additional relief under this part of the bill that was passed, I would definitely don't reapply for EIDL, and B, you're just going to have to wait for the SBA to reach out. Also touch briefly on the SBA Debt Relief Program. This doesn't get a lot of coverage, but it's something to be aware of if your PPP and EIDL resources, if you've extended them all. If you get a traditional SBA loan, those are the 7(a) program, the microloan program, community advantage program, 504 for commercial real estate. The SBA will pay the first 6 months of principal and interest as part of the various bills that have been passed over the past year. It could be up to as much as eight months for certain businesses in low-income communities. So if you are still in the market for capital, it could be worth exploring your options with the traditional SBA programs. See what your options are. They'll pay, like I said, 6 months principal, interest, and fees. the latest bill also expanded a number of these programs, 7A, 504, and microloan. Next, I'll talk about the website that I manage, our website, benchrise.org. It's a free online resource hub for small businesses who need help accessing tools and information for your business. We offer education on a number of different topics. For the past year, we've been focusing primarily on highlighting the additional, all the information we've covered here, and other information about the federal relief programs, B, the various state and local programs that have also been propped up in response to the pandemic. California, for instance, has what's called the California Grant Program. An additional $1.5 billion was just allocated to it, and they're going to be opening up new rounds of that grant program soon. There's other low-cost, low-interest relief funds being propped up in other states. Various cities and municipalities have grant programs. We're doing our best to compile all of those resources as we know them. As I mentioned, we're a national small business education advocacy group. A lot of the changes that we've seen come to the PPP have been the direct result of hearing from you and us being able to use your stories, your data, your insights to educate policymakers about the changes that are needed to the program. We recognized, for instance, that businesses had other costs beyond just payroll that they needed help with in the pandemic, like rent. So we were able to drop the payroll requirement from 75 to 60%. We recognized that the treatment of self-employed in PPP was not exactly equitable. And so we're glad to see these latest changes that were announced. So, there are lots of ways in which you can engage with us. You can receive our newsletter. You can share your story. We help to tell your story, get your voices out there and heard. So please do follow us on our social media channels, also our website, www.smallbusinessmajority.org. We also offer an online community forum. If we don't get to some of your questions that we are going to cover here in a moment, you can go to community.smallbusinessmajority.org and pose your questions there. I'm a frequent contributor, as well as some others on our team. Might be able to help you out with your specific situation. We also have our mailing list, our main website, smallbusinessmajority.org, and I mentioned our website, Benchrise. And with that, we'll turn it over to Q&A.
Okay, Brian, thank you so much. I did want to, we are going to move into the Q&A portion, and I wanted to echo what you were saying, that we will be taking questions, and that if your question does not get addressed during this Q&A portion, there's resources and references in the slide deck that you can access to reach out after the webinar. And we also recommend that you reach out with your SCORE mentor who can help you navigate the process of applying for these relief funds. So we've received over 600 questions. So there's a lot of questions in the bank today. We are going to take questions that we're seeing being asked frequently throughout the session. So with that, I want to move right on in here. Brian, we've been receiving a lot of questions regarding the 60% payroll rule, and just asking if you could talk a little bit more about that, if you could elaborate further on what that means.
Sure. So that's the rule that 60% of your payroll or 60% of your PPP loan proceeds must be spent on eligible payroll costs. Those costs include the actual payroll, the wage, salary, et cetera. It also includes any health insurance benefits you pay, state or local taxes assessed on that compensation, as well as retirement plan contributions, I believe, are all the covered ones. It was one of the previous slides. Is it okay if I go back and we go back to that slide?
It is, yes.
Okay. Let's just go back there. Yeah, so it's these costs over here on the left. Your compensation, any payment for leave of any kind, any allowances for dismissal or separation, group health benefits, including insurance premiums, retirement benefits, and state and local taxes. So if you receive a $100,000 PPP loan, now keep in mind your eligibility for PPP is going to be based on these costs as well. It'll be based on 2.5 months worth of the average monthly payroll costs here, essentially. So theoretically, assuming that you're still at your full FTE equivalent, you should have no problem even spending 100%, right, on these costs. So you just have to spend at least 60% of the payroll on these costs.
All right. This next question comes to us from T, asking Brian, if we are just applying for a first draw now, since they are allowing gross for self-employed, would we also be able to apply for a second draw?
That's a good question. I don't know the answer to that. I mentioned that the window for PPP closes, this round closes at the end of this month. And technically, to be eligible for the second draw, you must have spent your first round money, right? That's one of the requirements. And the minimum amount of time you have to do that with 8 weeks. So my guess is no, you would not be eligible for second draw. But that's kind of another reason why we're thinking about or trying to advocate on behalf of maybe extending that window, especially if additional funding is left in the pot, so to speak.
All right. And then Maria, she's asking here, if the second draw, is this only if there was a decline of income between 2019 and 2020?
For income, I imagine she's self-employed. Again, I'm not quite clear, as I mentioned, on the rules for qualifying for second draw for self-employed entrepreneurs under these new rules. I didn't see anything in the rule that was released. I would imagine that if you were able to show a 25% income decline between 2020 and 2019 to the bank, that they could qualify you. But again, I don't know 100% for sure. For a normal business, yeah, you just need to be able to prove a revenue reduction of 25% from 2020 to 2019, or the rule specifies a 1 quarter compared to a 2019 quarter. But we've seen some banks just looking at 2020 total numbers compared to 2019, vice versa.
Okay, so we've had a lot of questions coming in around knowing whether you're eligible for PPP and these other federal stimulus offerings, asking, if they're specific business or how long they've been in business. So what is the best way to know if your business is eligible for these relief funds?
I would say chances are you're eligible. The biggest things as far as PPP are concerned, and EIDL too, is that you have to have been, for PPP, you have to have been in business as of February 15th of 2020. I believe for EIDL, it's February 28th or maybe January 30th of 2020. It's kind of different, but you have to have been operating basically at the start of 2020 to be eligible for these programs. But other than that, assuming you don't have more than 300 employees in the case of the second draw, or 500 employees in the case of the first draw, you're eligible industry or anything. For nonprofits, most nonprofits are eligible. Certain ones are not. Like if you engage in lobbying activities, for instance, you're still not. But they've expanded it to include chambers of commerce and other kind of trade group associations are now eligible. So chances are, long story short, chances are you are eligible for both the PPP and the EIDL program. I didn't mention too much on the shuttered venue operator grant. This was a specific set of money put aside in the December bill for theaters and other live venue operators. Again, the SBA still hasn't released any information about how that program is going to be. Well, they've released some information about what the program is, but they haven't started actually administering that program yet. But I would just go to SBA's website and Google shuttered venue operator grants to get updates on that. We're also keeping an eye on it as an organization as well.
Okay, Brian, this next question comes to us from Mike. So during the presentation, you'd mentioned pending forgiveness. And Mike says that he hasn't filed a forgiveness for the round at this point. Just wanting to know what is meant by that pending forgiveness. If you could talk about that a little bit more.
Sure. Yeah. I mean, there's nothing in the law that says that you have to have filed for forgiveness or have pending forgiveness to be eligible for the second draw. What I was referencing is that we've seen some instances of folks who are applying for a second draw having their application held up because of a glitch in the system because they had a pending forgiveness application for the first draw. To be eligible for the second draw, you must have spent the first round of proceeds, but not necessarily apply for forgiveness. We know that the forgiveness process has been uneven for a number of business owners based on the bank that they did PPP with. Some banks didn't start processing forgiveness until recently, or if at all, others jumped on it right away. So, there's still, there were some glitches in the system if you had a pending forgiveness application in that were preventing second draw applications from going through. But I wouldn't stop if you think you're eligible for second draw, but you haven't filed for forgiveness for the first round. I wouldn't let that stop you from trying.
Okay, great. Thank you. Next question here is from Donna. Donna wants to know if the 1% interest charges, are those also forgiven, or is it only the actual amount borrowed?
So the 1% interest would be the interest rate on any portion of the PPP that is not forgiven. So that would convert into a loan, and that would not be forgivable. But if the entirety of the PPP loan is forgiven, then you will owe nothing back. It essentially becomes a grant. You don't owe 1% on anything. But once you've expended the PPP money, then you apply for forgiveness through your bank. You fill out whatever kind of documentation, certification that they require. And based on the information you provide, the loan will be forgiven in whole or in part. Any part that's not forgiven converts to a loan repayable over 5 years at a 1% interest rate. Okay,
so Brian, this next question, and I think that you may have answered this to some degree in an earlier question, but I want to rephrase this because we've received so many about this. This one in particular comes from Francisco, and Francisco is asking, if I received the second PPP loan, can I request the adjustment amount according with these new calculations?
Unfortunately, no. I think he's talking about it as far as self-employed individuals are concerned. If you've received the loan already, then no. At this point, there's no way of going back and readjusting or getting additional relief based on your gross income compared to your net profit. We recognize this is a big blow to business self-employed individuals that did successfully get PPP, even if at a lower amount, right? That they're kind of left out by these new rules. So, unfortunately, at this point, the answer is no. Hopefully, we can change that.
Okay. So I'm combining two questions here. One from Victoria, just asking if you can speak to how the targeted idle advance loan amount is determined. And also from Napoleon, can you apply for a second idle for your small business?
To answer the first question, the targeted idle advance will be based on two things. They're first targeting folks who did receive the idle advance, but not at the full 10,000. There was limitations put in place based on number of employees. Some folks only got 1,000 or 2 or 3 or 5. So first, they're going to be looking at businesses that received less than 10,000, but did receive something, who live in these designated low and moderate income areas, and make them whole up to 10,000. The second is they're going to be going after folks who applied for idle after the advance funding had fully expired, who live in these low and moderate income areas and make them whole up to $10,000. After that, I don't think that there will be anything left. Those are the two groups that the SBA has identified to date.
Okay, I'm sorry, Brian. Did you also address how you can, if you can apply for the second EIDL?
Right.
Can you apply?
I don't think so. No, I would not. If you have a pending EIDL loan, if you have an existing EIDL loan, I don't think you're able to apply again. I probably wouldn't apply again, but I'm not 100% sure on that. But I'm pretty sure you can.
Okay, so a couple questions here with utilizing PPP. One question here from Patricia is asking, can you use PPP to pay off EIDL?
No, I don't think so.
Okay, and then what about PPP to pay retroactive payroll?
No, it'd only be payroll accrued during what's called your covered period. So your covered period begins the day that you receive the loan, and then it can be any period up over the next 24 weeks. There's some specific calculations and rules kind of on the forgiveness application if you have to fill out the full forgiveness application, which you calculate that, but no, it can't be used for backdated payroll, only for payroll incurred or costs incurred over the covered period. As going back to the EIDL question, if you did, there is a certain, I'd have to go back and look at the rules, but if you received an EIDL loan before April 3rd of 2020, and I think if you use some of those costs if you use some of that EIDL money to fund payroll, then you can refinance that EIDL loan with your PPP and theoretically have it forgiven. But I think that's the only case in which you can use PPP to repay EIDL.
Okay. So, Brian, this next question is from William, and we've actually had multiple questions asking something very similar. This one in particular from William is asking for a new applicant. When would the 8-week or the 24-week period begin for usage?
It begins the day in which you receive the loan. The SBA does provide some flexibility for what they call an alternative covered period, if it makes sense to sync up with how you record your payroll, right? Like a look back of a week or 2 weeks, depending on your payroll schedule as compared to when you got the loan. But essentially, it's when you got the loan.
Okay. So next question from George asking Brian, do you know if a sole proprietor, can they apply for PPP if they are collecting unemployment?
I believe so. I don't see any reason why not. There might be something in the rule in regards to that that I haven't seen yet, but no, I don't think that would be a restriction.
All right. Next question regarding the EIDL loan. Can you talk about the benefit of including the EIDL loan for refinancing?
I don't know too much about